For the Asian markets, you have Nikkei, which is clearly doing perhaps the best right now. It's up over 300 points.
Its Financial Intelligence Unit has imposed a penalty of 5.49 crores on Paytm Payments Bank.
The recent low, last week's low, is 45,661, which should not be broken.
Total cost is in excess of 17,150 crores, so it's a very large project from NTPC.
The first rates are up on your screen as we speak. It's what, 22,430 on the Nifty.
But since the new and emerging technology, we have to look for blended finance and alternate sources of green funds from overseas.
Yeah, that's right. There's been a huge surprise from the U.S. growth. We've seen all major central banks, as you noted, raise policy rates by 400 or 500 basis points.
And it's turning out to be a listless Monday morning. Markets are trading in a very tight band.
If you look at the last 20 years, China's market valuations have been lower than where we currently are on only 4 instances.
Now, what we've been picking up is that since the time that proposal was announced, there were various representations which were made by the life insurance companies as well as the Life Insurance Council to the insurance regulators suggesting certain rationalization measures.
11 bulk drugs are work in progress. Their plants are under construction.
Quite a range-bound session today, Bhavitra. Yeah.
Well, that was the day so far. I mean, it's not flat. The market's doing just fine, about 50 points on the Nifty. After a while, we're a full house here on Closing Bell. We're coming to you live from the CNBC-TV18 News studios, and the last hour of programming coming up. I'm Prashant. With me, my colleagues Rima and Surabhi. Rima, of course, comes back from
a work trip.
From Barcelona, the Mobile World Congress.
Let's lead with that.
It's a good location, right?
Well, a fantastic location, lots of work, but I thoroughly enjoyed it.
Najil, hi, afternoon.
Afternoon, I'm so excited. I'm shooting in Andheri later this weekend. And Rima is saying, yeah, Barcelona is fine. Good work trip. But,
well,
It's two ends of the spectrum. It's fine. We appreciate the effort nonetheless. But guys, I mean, Rima's back, and we've got 22,400 on the board. It's been steady innings. The good work that the Bulls did on Friday, on Saturday, and it seems to be now continuing. A little bit of a pickup now.
Absolutely, it is continuing. But the broader market, at least the last I checked, actually the frontline indices are okay. We're 40 points since the morning. I mean, it's been like that. But the last I checked, the broader market is essentially where not problem, but market breadth, for example, is negative. It's been negative for the last few hours, and the small cap index was down 0.5%. It's actually down about 0.4% or so. So there you go. So a lot of individual names are seeing a little bit of profit taking across the board, actually, on the screen. Small, I mean, 1%, 2%, 3% in that range, but there's enough and more. Liquid names which have done very well, and this is not just true today, but for the last couple of weeks as well. It was true last week as well. A little bit of air is going out in the broader markets, so as to speak. Overall market breadth negative. PSU stocks is the other pack which is actually outperforming, and how. I think BHEL is now at a 15% upper circuit. Power, oil, steel, these are all PSU areas within the PSU space which are doing well. Look at SAIL, look at BHEL, look at other names, Oil India, for example. So big moves in some of these names, and we'll talk more about this as we go along. Rima.
Hi. So insurance companies, particularly HDFC Life, is also seeing some big gains today, 3.5%. We'll talk more about it. Reliance Industries has been showing you steady gains through the day. At the day's high, it's a 1.5% gain on Reliance Industries. So that's supporting the green on the screen. And on the losing side, you have autos, particularly Eicher Motors, M&M, a bit on the back foot. Apollo Hospitals has given up some ground. And the Nifty IT index is a cut of close to about 0.6%, with LTI, Mindtree, Infosys under pressure. Hi.
Hi. Well, on the mid caps, I was looking at some sort of movers and shakers here and there. It's actually largely all PSUs. As Prashant also pointed out, BHEL now is tracking a gain of 16 to 17%. That's the kind of rise that we're seeing. But if you try and look beyond, you have a Novama Wealth, for instance. There's some kind of a flip up on a Monte Carlo this afternoon. A very, a smaller paints company, Shalimar Paints, that is up and about. You have some movers and shakers, but yes, it's not a big, wide sort of tidal wave of mid-caps moving higher today. There is some sense of caution in the market. But on the Nifty, Nigel, it's been looking good. I mean, we've even the morning dip got bought, right? That's the texture of this market. You get even a 50, 60, 70-point dip, and the buyers simply queue up.
Well, indeed. And Reliance Industries, what do you say about that one? Just take a look at the move on that one. That's woken up in the last 10, 15 minutes or so. And that's been the driver really for the markets, because you talk about the Nifty bank, that's the largest weight on the index, not performing that well. But Reliance Industries, the way that stock has been moving, it's actually making up a part of this underperformance of the Nifty bank, not just today, but even year to date. If you look at Reliance Industries, beautiful move is what we're seeing out there. Let's get in Mitesh though. Mitesh, you have to remain long on this market, right? And that's making you money. But we're holding at around this 22,415 odd mark. Where do you see us headed from here?
Good afternoon, Rajin. I have been advocating maintaining a long bias, though I think the indices are having a very quiet kind of a session today. But the setup is still positive. So either you have some long positions, and if you get an intraday dip, buy into it. And on the stock side also, we've been trading with more of long bias. Though right now I have one buy and one sell call. Axis Bank is something which I like. That's a buy. Keep a stop below levels of 1,090 and look for targets of 1140. And Eicher Motors, I think Surbi was highlighting that it's giving some kind of a negative breakdown. So sell here with a stop at 38.20 and look for a target of roughly around 3610.
Okay. Mitesh, stay with us actually. We want to get a few sort of view on insurance stocks. But let's get the story out first, right? So life insurance companies are in focus, stocks are in focus. CNBC-TV18 learns that the regulator, IRDAI, may actually back down on some of the surrender value proposals. It's an important story. Yash is joining us. Yash, this would mean significant relief if this does come through. What are you picking up?
Well, Prashant, that's correct. Significant relief for life insurance companies, and it would take away a major part of the overhang as far as these companies are concerned. Now, what's the overhang? In December 2023, the insurance regulator, IRDAI, had proposed an increase in surrender value, which is the benefit which life insurance companies have to pay to policyholders in case of voluntary surrender of their policies before maturity. Now, the increase which the regulator had suggested was quite significant, almost doubling the kind of benefit which insurance companies have to pay. In fact, there were brokerages also which suggested that there could be a hit of 400 to 500 basis points on the margins for these insurance companies. Now, after that proposal came out, various life insurance companies as well as the LI Council made representations to the insurance regulator seeking certain relaxations. What we've been given to understand from our sources is that the insurance regulator is considering rationalization of some of the elements of this particular consultation paper, that is higher surrender value, and essentially looking at benefiting the policyholders, also taking some burden away from life insurance companies. There are two important points which the regulator is considering according to our sources at this point of time. The first one is with respect to making a distinction between short-term surrenders and long-term surrender. Under this, the regulator is considering to keep the same surrender value calculation for policies which are surrender below under 5 years, the same as the calculation exists today. The second one is the policies which get surrendered beyond 5 years, those could be given a higher surrender value to the tune of what the regulator has suggested in its consultation paper. The second one is reducing threshold when it comes to calculation of the surrender value itself. Now, of course, the regulator suggested a threshold depending on which the surrender value gets calculated. If the threshold value comes down, then of course the overall surrender value to the policyholder could also come down. Now, a final decision on this thing is expected in the regulator's board meeting, which is expected to happen in the last week of March.
Yash, have you been able to speak with analysts, etc., to figure out how significant would this be? I mean, just a broad sense.
Well, when the consultation paper had come out, the stocks had given up because this was looked at as a large negative for life insurance companies. Their expenses would increase significantly, getting an impact on their margins, as I said, to the point of about 400 to 500 basis points. We put this story out today. Analysts are, figuring out how this calculation would be incorporated. But one important thing that I've been able to pick up is that large portion of the surrenders which happen in the life insurance sector, they largely happen in policies under 5 years. And if under 5 years, the calculation remains same as today, this could be a big positive because a lot of, that negative impact would get negated since this higher surrender value will only have to be given on policy surrender post 5 years.
I guess it just takes away the overhang, because if the earlier sort of a move was to come about, then it would have been better for life insurance holders, the buyers, but maybe not that great for companies. But it seems that the regulator is doing away with a lot of that. earlier thought process. Thank you, Yash, very much. We're seeing that play out on some of the stocks here. We have Deven joining in. So let's take this up with Deven. Deven, good afternoon. Always great to have you on Closing Bell. Now, in any case, insurance stocks have been underperformers. If we look at the rest of the market, even the rally this year, they've not done much. In fact, some of them, Bajaj Finserv, HDFC Life itself, they're all down 4-5%. SBI is up 3-4%, SBI Life. How would you view this? If indeed it is more or less status quo on surrender value, then how would you view the whole development? And what is your take? I mean, are you looking to buy? Are you advising to buy any life insurance stocks as of now?
Good afternoon, Surbi. I think we are analyzing this particular possibility on a company-by-company basis. Now, for those companies which are largely focusing on the term insurance plans, for them, I think this particular equation doesn't work. I think that the surrender value equation doesn't work here at this point. In their case, it is largely working for those companies which are having the endowment plans. And I think that is where probably one will have to look at the performance based, I think, on the endowment plans. Not an easy proposition by any means, I think, as far as looking at the books are concerned, unless we get the breakup from the companies, to analyze the information. And since this is not a policy or a directive at this point of time, the companies also would be refraining from putting across numbers straight to us. So to a greater extent, we don't have the calculation ready. But should it happen, then the larger ones would be affected, would be the ones who are basically having 5 years and above kind of a situation in which the surrender value cost increases. And that could have the impact on the cost aspect of the companies. Again, we'll have to see policy framework-wise, in respective companies, how much is the percentage of surrender of the policy, and then probably arrive at numbers. So today, only guesswork. Maybe the market is probably getting a little bit more nervous because of this kind of news coming out. We'll have to see how exactly the details come out and then take a more assumption.
By the way, here's an update from BHEL. Remember, Vivek was telling us how the company was the sole bidder for a Singrauli plant construction. BHEL says that yes, they submitted a price bid on the 21st of December. They were the only bidder, the sole bidder for this particular order by NTPC. But as of now, they've not won the order, and they're just throwing in a note of caution. Submission of bid does not result in an automatic bagging of the order, though they are confirming that the company is the sole bidder. The stock has just seen a minor nick. It's still up, close to about 14.5%. We'll discuss, the power stocks with Deven, and we'll get in Vivek as well to throw some more light on it. But before that, Deven, any particular thoughts from the February auto sales numbers? Eicher Motors today is down 2.7%. Tractors has been in the slow lane. M&M has corrected 2%. Any noteworthy trends that stand out for you?
So I think the market is largely reacting, to monthly numbers. In my viewpoint, monthly numbers are good, but at the same time, one should not be setting the trend based on monthly numbers. As we understand, the commercial vehicle segment in particular would have larger amount of offtake going forward as well. And maybe that is the reason I would think that because of the larger spending by the government on the infrastructure, or even for that matter, industry and the PLI schemes, or for that matter, scrappage policy into force, all of them cumulatively put together could possibly result into a sustainably large number of the new vehicle offtake coming up from the market eventually. And we keep our eye on that particular possibility. So currently, whatever may be the reason for which tractor company sales are shown little downward trend, or even for that matter, commercial vehicles to a certain extent, we think that any correction in the price in commercial vehicle per se, where we remain distinctly confident, we would probably use this as an opportunity to buy.
Stocks coming off a little bit more now. So it was up 16, is up 13% now. That's it's a little unusual, right? But that's the market we're in. Ramped up on the back of this order. It's a large one, and of course now it's coming off on the clarification. So interesting. We'll actually try and reach out to the company and try and understand where this is at beyond the clarification which they've provided to the exchanges, because I think it'll be important to do so. One thing is clear. If there is a lot of thermal capacity which has to be built out, the power minister has been saying that it is needed. And he put out some numbers over the next 5-6 years till the transition to renewables, etc. happens. A lot of it will happen via state entities. I mean, it will happen through NTPC, and then in turn downstream, it will happen through companies like BHEL. But here and now, as far as the order on the back of which the stock run up, there is this clarification. We'll take a break here. We'll come back. Amit Gupta of ICICI Securities PMS will also be joining us on the other side. Stay with us.
Welcome back. The mid-cap index is holding up in the with a gain of close to about 0.25%, but the small-cap index is down close to about 0.5%, and that's what's leading to the negative advance decline ratio. In fact, even the Nifty Microcap 250 index is down nearly 0.8%. The Nifty Small-Cap index is a cut, as I said, of nearly 0.5%. The advance decline ratio should come up for you on your screen. We're looking at about steady about one stock gaining for two stocks declining in trade. On the losing side, particularly in the smaller universe, you've got Sigachi down 13%. Z Media has seeing a fall of close to about 5%. IREDA on large volumes is under pressure. RVNL is down 3%. Max Healthcare is weak in trade. IRB Infrastructure is down 2.5%. And in the banking lot, you've got UCO Bank and South Indian Bank, which is seeing nursing losses of about 2.5%. Vodafone Idea continues to, come under pressure. Vodafone Idea is currently down close to about 2.5%. But, after the enabling resolution that the company has announced, the stock continues to, see some losses. But let's talk about the power space. NTPC is the top Nifty gainer. The board has approved a 17,000 crore investment in a super thermal power project. BHEL is the other one. It's emerged as the sole bidder to build the plant. The BHEL has clarified that it does not mean that they have won the order. Vivek joins in for more details on this story. Vivek.
Well, you're absolutely like you mentioned, first, what's the development that NTPC has put out to the exchange yesterday, that the board has gone ahead and approved. Now, this is a very large thermal or a supercritical thermal power plant that NTPC is setting up at Singrauli in Madhya Pradesh. It's a 1.6 gigawatt, that is 2 into 800 megawatt plants will be set up. The total cost is over 17,100 crore. In fact, FY24 has been quite strong as far as NTPC is concerned in terms of thermal order capacity addition. The company earlier had also gone ahead and added 1.6 gigawatt critical thermal power plant, and this was for Lara project. Even there, if you recall, BHEL had emerged as the sole loan bidder. Now, when you're talking about the end of Q3, what is the FY24 capex guidance or the thermal capacity guidance that NTPC had guided the street for? Remember, the company increased the thermal capex target to 16.8 gigawatt from just around 11 gigawatt earlier, and in addition to the 10 gigawatts that the company already has under construction. So currently 10 gigawatt is under construction, and the timeline as far as the 16.8 gigawatt capacity is concerned, NTPC says in FY25, 5.6 gigawatt tendering would be done, FY26, 6.4 gigawatt, and FY27, approximately 4.8 gigawatt would be tendered. So currently, it's largely on the back of the very aggressive capex plans that the company has in terms of thermal capacity addition that is keeping the stock quite buoyant in the session today. Now, coming to BHEL, just like we mentioned in the morning, the company too has told the exchanges that they are indeed the lowest and the sole bidder for this particular project. They've not yet got the award, but it is anticipated that given the fact that they are the lowest bidder, that ideally they should be the ones building the plant. Company has already received two very large orders in FY24, so it's been a very good year for BHEL in terms of order inflow. Over 20,000 crores, two large orders is what the company has received.
Oh, indeed. Look at the move in 2024 itself. BHEL has gained about 36% so far in just 2 months of the year. And this on top of a spectacular last 1 year rally. 1 year move is about 250% on BHEL and counting 12% just today as well. Yeah, that's what we're talking about. The big rally on this capital goods major. But we are also looking at wind energy players, stocks like Suzlon, Inox Wind. A lot of these have been under the weather, and this as the Ministry of New and Renewable Energy is looking to bring back the reverse auction mechanism when it is auctioning out wind power capacity. Vivek, tell us how this mechanism was working earlier, because I think it was in play a couple of years back, then it was done away with. So why are they're looking to return to it now, this reverse auction mechanism?
Well, when you're talking about the thermal power, it's actually a lot of positive news flow that's coming. But as far as, wind power is concerned, it's been a bit of a setback that's actually transpired over the last couple of, weeks. So, what's actually happened is that the MNRE, that is the Ministry of New and Renewable Energy, this is a surprise move and a slightly negative move as far as the entire wind power chain is concerned. They've gone ahead and reinstated what was earlier known as reverse auctions. Remember, the MNRE had gone ahead and said that reverse auctions would be stopped at the beginning of last year. And this had led to a bit of a re-rating as far as the wind power value chain was concerned. So what they're saying is that right now, once again, reverse auctions will come back. What it basically means is that once the bids are put in, it's an online process where even other bidders can see the lowest bid. And if they want, they can underbid. Currently, what happens is that it's a closed bid, and at the end of the bid, the lowest bidder is the one that actually gets the project go ahead. So on the back of that, analysts believe that this could be quite negative. Number one, for power producers, but more than power producers, wind turbine generator companies like Suzlon and Inox Wind could bear the brunt of the pressure, given the fact that their return profile could be impacted on the back of much lower bidding, which is anticipated. However, industry sources believe that at this point of time, given the kind of negative news flow and the kind of impact that the industry saw, when this particular auctioning mechanism was in place, they believe this time around there will be a lot more sanity when it comes to the actual bidding.
Okay, thanks a lot for that. That's the hope, right, Vivek? Some sanity will prevail during this bidding, but for the time being, the stocks are under some pressure. Hi Devin, good afternoon, good to see you in. Give us your view on both these names, Suzlon and Inox on one hand, and also BHEL. The stock is in a very strong upward momentum. Now they're just clarifying that they haven't heard about this order from NTPC, but they are the sole bidder. So the likelihood is high that they get it. What's your view on both these two stocks? BHEL from the day's high has come off close to around 10 bucks, while you have Suzlon as well as Inox that have gone up one way, and today they're under some pressure. Your take?
Yeah, Nigel, good afternoon. Well, I think BHEL is always remaining, extremely promising case. More than 1 lakh crore worth of order book already with them. And it continues to increase given the kind of program that many of the power generating companies, including NTPC, is proposing in next 2-3 years' time. I would think that the BHEL would always have, relatively much stronger book to execute. However, what is not very convincing is the results which come along with. Whereas on one side, you always have the higher potential. On the other side, the results are not commensurately matching. In fact, I think in the last 3 quarters, the company hasn't made profits. So that surprises you. Maybe then interaction, we find that some of the older contracts, probably where the pain is, where the margins are not available. And with the new contracts coming in, they are basically hoping to get relatively better margin. So should that happen, then the stock should get re-rated. Of course, the price has already improved. But my take is that it will re-rate because of the larger amount of business conditions favoring them. As far as the wind power suppliers, turbine suppliers are concerned, take is that given the past experience of significantly 5-7 years back experience, says that if this kind of mechanism is practiced, then probably the bidder will refrain from bidding. I don't think that that situation will be there at this point of time. Maybe the bidders have also become more mature, and I would think that they would also work in concert with each other as far as the bidding goes. So maybe reverse auctions, negative impact which one has seen in 2014, 2017, 18 period, that critical impact may not be played out in this period. So we'll have to wait and see. But my take is that it should not be seen very negative at this point of time.
Okay, all right. Devin, we'll leave it there. Appreciate you joining in, and it's a pleasure speaking with you as always. Thanks very much. Amit Gupta is now joining us. He's Senior Vice President and Fund Manager at ICICI Securities PMS. Amit, good to have you with us here on the program. Thank you. Let's just start with names like what we were discussing, BHEL, but then there's also Oil India, there's NTPC, there's GAIL, there's Power Grid, there's ONGC, SAIL. It's PSUs. Once again, 2.5-3% gain on the index. So just wanted to understand what you like in this space, and maybe if you can begin with a comment on BHEL. There are those like Kotak Equities who believe that it's very tough to justify BHEL valuations under any kind of scenario. But there are others, of course, who are willing to back the story. So your thoughts, Amit?
No, you're right. So regarding the valuations, so if you see BHEL, yes, it is richly valued because the order book positioning has to be converted into the revenues also. If you see the last 3 years of BHEL, it was somewhere around 60,000, 55,000 crore order book. But now it has gone to, exceeded almost 1.5 lakh crore. And I think this is where the growth is coming. And I think another important part is that they are diversifying the order book also. I think by financial year 26, more than 30% of the order book is going towards the other segments. So for example, they are coming out with some particular guns for the warships. It's a different ball game now. They have also gone into consortium with Titagarh wagon for the railway wagons. And that is how they are diversifying. And for the core order book position, which comes from thermal, I think there is a game changeover, right now completely, because the thermal capex from 2015 till 2022, it was a degrowing, -1% CAGR. And that is now expected to grow by 20% in another 4 or 5 years because the power demand is getting higher. So we have seen it that the power demand is almost compounding by 9-10%, which used to be 2.5% actually before. And this is where I think the requirement, the order book positioning of this company is going to increase. The valuations will become better when it is getting converted into the revenues also going forward. And the previous orders which had a low, a low margin impact, I think that is also getting over. So overall, the situation I think is much better now for this company.
Okay, that's BHEL doing quite well in trade today. Amit, hi, good afternoon. What about the rest of the power space? I mean, actually, power stocks themselves, they've had a pretty good run. Look at NTPC, it's still tracking a 4% gain even today. Do you think there's more energy left here? I mean, in terms of fresh purchase to buy at current levels, does that make sense?
I think, see, if you look at the overall PSU space right now, right, and you compare the valuations of it with the index valuations, it is still very attractive. The BSE PSU index valuations from 2010 till 2017, it used to be at a discount of 31% vis-a-vis Nifty valuations. And then recently it declined before this move in the last 1 year. Before that, it had declined till 68% discount. Now it has recovered to 48%. And I think from 48 going back to 31%, it will take another 25-30% of move actually, which will be very significant. So it can come over the years now. But the important point is that 2010 till 2017, if you look at the PSUs, there was a problem of cash flow, there was a problem of decision making, and there was a problem of no more capex even from the public side. But all these three things are changing now, and that is where you cannot have that kind of discount vis-a-vis the index. So even while reaching to 31% discount, I think there may be room for further leg up, and that is why you see the corrections in the market. In between, you see stocks also declining, but the money flow is very robust. In fact, if you look at the FI holdings in some of the PSUs, you take the case of IRFC, which has seen a good move. Hardly 1% holding FIs have. That means FIs are also missing out this particular move. They have 30% around in certain stocks 15%, but in many stocks they have 1% of holding. And I think this is where FII flows also are waiting for declines in the market. Even I have seen from 2022, whenever Nifty has declined, FIIs have poured in money. Whenever Nifty has reached to 5-year, 10-year average valuations, FIs have poured in money. The same thing, they are looking for certain stocks where the sectoral tailwinds are getting strong.
All right. Hi, Amit. Good afternoon. Good to see you. And Amit, there was a CLSA note that came in earlier today. They were saying on ferrous names they're not too positive, but they like the miners, iron ore miners, coking coal miners. And NMDC is something that you're quite positive on. They've been showing good volume growth, and pricing in this quarter will be even better than last quarter. Your view on the stock added on this 240 rupees odd?
So I think mining is coming out after almost 13-15 years of lull period. I still remember that there was a meeting of the minerals minister, and it was asked actually by the prime minister, that which are the critical minerals and where we can get Atmanirbhar. So all of these things were coming out, and then we started seeing that if you see the volume impact on some of the mining companies like NMDC, as you mentioned, in iron ore. So in the last 10 years, it was somewhere around 32 million ton, 35 million ton. But now this fiscal year is going to have 46 million ton of volume. And I think in the coming 2 years, they may have 55 million ton. The thing which was very horizontal, now it is seeing the revival. And this is what going to be seen in the stock prices also. And these are not very richly valued. They are still 8-9 times valued stocks. I understand some stocks like manganese ore, they have become more richly valued, but NMDC still have a lot of steam, I think, in terms of valuations.
What about hotels? They've had a pretty good run led by robust demand, pickup in travel and tourism. But can we expect, some more PE re-rating? While the earnings growth may continue to look, upbeat from here on, what about PE re-rating? What kind of an investment would hotels be if you put in at current valuations?
So see, PE re-rating happens when, some consolidation happens in the sector. You see that there is more, price-wise, you have more something, the demand is higher, the supply is lesser. And this is a clear 5% gap actually in the hotel space right now, because the demand is growing by 10%, supply is around 5%. I think another 3-4 years it will take to catch up that particular thing. And consolidation is happening. And I think if you look at the room rates also, so yes, we have seen the increase in the room rates also. Annualized room rates, average room rates have increased by almost 12-13%. The occupancy pre-pandemic, which we used to see around 60%, it has gone closer to now 69.5%. So obviously, if any company has some debt also, it will also perform in the hotel space. That is clearly what we are seeing. For example, Lemon Tree, which has some debt, but it will be paid off if you are increasing the room rates and the people are moving out for the hotels. In fact, the corporates also, the corporates also are moving out, whether pan India or outside, and that is also leading to a leverage actually for the hotels. So overall, it looks good scenario. Domestic tourism also can pick up going forward more. That will also create a positive scenario when there is a demand supply mismatch. So I think it's a good platform for hotels after the long period of time, which is started actually since the last 1 or 1.5 years before. And I think it should continue. Yes, sometimes valuations become very richly valued. You have to wait for your turn. It is possible 1 or 2 quarters they may spend time, valuations become attractive, then you can start buying more. What happened to Indian hotels, if you see last 1 year, it has spent a lot of time. And I think that is where again the stock is started.
All right. Just 2 names I want to put up. Medanta, if you can have the intraday up, it's down 6%, 1241 on Medanta, beg your pardon, the hospital company. There you go, that's the one. And then look at Rainbow, which is the children's hospital. 1210. There were some who were saying that because it's a kids' hospital, children's hospital, some of what the court has suggested in terms of standard procedure for standard rates for procedures will not apply. But that was also seeing a sharp cut at this point. Amit, have you looked at any of the hospital companies which have corrected?
So hospitals, it's a good segment because it is also the beneficiary of unorganized to organized. But valuations are rich. I think if you look at before the Manipal deal, we had 18 times EV by EBITDA for the industry, and then it moved to 24 times EV by EBITDA. And then we started seeing that many hospitals started coming for the IPOs. I think when you see many IPOs coming, obviously it's a sign that they want to cash up on this higher, the valuation in the sector. And that is where we need to be a little careful also. I think some more consolidation is possible for the coming quarters in this space before the next phase of move.
Okay, all right, Amit, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here on CNBC-TV18. 40 points higher is what the Nifty is at. But, if you look at the advanced decline, the gap is actually maybe even widened a little bit. 1,600 stocks are lower and about 900 stocks are higher. So that's the market breadth that I'm talking about. So, it's a decent kind of a gap there. So the pressure, of course, coming in from smaller names. We'll take a quick commercial break here. We'll come back, D-Street Chatter with Nimesh and what he's picking up. And, of course, our buy today, sell tomorrow trades, short-term trading ideas with our technical experts. Stay with us.
Welcome back. You're tuned into Closing Bell, and we are coming to you live from the Motilal Oswal newsroom. Well, plenty to talk about in terms of flows. So let's go across to Nimish, who's joining us. Nimish, what do you make of today's session? The headline index is still holding well, but the small cap index is actually trading in the red for bulk of the session. So it tells you that there is some profit taking from the broader markets.
Profit taking and a bit of sideways as well. The broader markets have turned a bit sideways in the last few days, and that's the reason why, while the Nifty is up 40 odd points at record highs, but overall feedback is it's a boring market. Even from a flow perspective, my sense is you'll see a bit of a negative trade in today's market from the larger FIs. In fact, there is a small MOC basket selling as well in the large cap names, so that's going to play out maybe in the last 30 minutes of trade. But I guess the only sector which is doing good is the PSUs. Again, big move in the PSU stocks. The index is up 2.5%. The power PSUs are just firing. And despite the fact that BHL has set on record that they've not got any orders, that stock is up 12% and at record high. So that shows the momentum which is there in the PSUs. And remember, last week I know for sure there were some smart investors who went and actually shorted a lot of PSU stocks in anticipation that the rally is done with. So a lot of people got caught on the wrong side, and maybe today's BHL move is a bit of short covering as well. That's the sense that I'm picking up. But broadly, a dull day with broader markets on a bit sideways, and the flows are a bit negative with an MOC. Last 30 minutes will see some selling as well.
I imagine those people who went short on it, the way the stocks have moved in today's trading session. But anyways, part of the game. What about individual stocks, Nimish?
So in terms of individual names, the first stock is Max Healthcare. That stock has recovered from intraday lows after a large block deal. I understand that a leading domestic mutual fund was a buyer in today's block, so maybe the disclosures could be interesting there. So that's the first name. The second name is Tata Communication. This is an interesting one. Quietly, this stock has relatively outperformed in the last many days. Even in today's days, it's at days high, good volumes as well. And the city is anticipating some corporate development very soon. Most likely, it's going to be some sort of a tie-up with regards to artificial intelligence. So that's the buzz on Tata Communication. The third name is Samudra Motherson. Been rallying in the last few days, but today, if you look at the chart, it's sharply come off from the day's high, and there is a buzz of a large block deal very soon. Remember, a strategic investor is looking to sell a large chunk in Samudra Motherson, so that can come potentially in a day or two. And the last one is Lemon Tree. For the second day running, good volumes, strong buying as well. So expect high delivery volumes, and there is cash-based buying happening in Lemon Tree for the last couple of days.
Okay, thank you very much for that interesting list as always. Mitesh Thakkar is now back with us for a few BTST calls. Mitesh, continues to be a very slow, listless, quiet trading session, but the Nifty is holding on steadfastly to 22,400, and there is action in banks yet again. The Nifty banking index is up more than 200 points. Thoughts on the day so far and your BTST calls?
It's been a very quiet day, but as you rightly said, it's a positive day, and there's no sign of weakness or indicators turning negative. So maintain a long bias. I have a BTST on MFSL with a stop at 985 for targets of 1025. And Reliance, I think, is finally looking like it'll close about 3,000. I think that will be a fresh swing move above the previous closings, and therefore a BTST here with a stop below 3,000 for targets of 3050.
Okay, got that. Mitesh, thank you very much. Well, with that, let's move on and look at some interesting analysis that Hormuz has put together for us. Data Patterns is in the spotlight as the stock has hit a record high. Hormuz is here with the details. Hormuz, what are you looking at?
Back in the spotlight is Data Patterns, actually. And if you remember, just a couple of weeks earlier, on the 16th of February, Data Patterns had a mega block deal where around almost 11 to 12% equity had changed hands. And data had shown that Florentry Capital had a clean-out trade in that transaction, and it sold its entire 10.7% stake at around 1,837 rupees a share. Since that day, within a span of 2 weeks, the stock is up 63%, and it hit a record high, crossing the 3,000 rupee mark in today's session, and it is almost up 5x from its IPO price of around 580 rupees, which it had debuted in December of 2021. Now, what is the recent development as to why the stock has been buzzing off late is, if you remember, on Friday, there was an announcement from the Ministry of Defense that it had signed 5 major capital acquisition contracts with 3 entities. One was L&T, the other one was Hindustan Aeronautics, and the third one was BrahMos Aerospace. Now, why BrahMos Aerospace is significant? Because Data Patterns is one of the significant and the largest suppliers to BrahMos Aerospace, and it has been associated with that entity for over 2 decades now. So as a result of which, the stock has been buzzing recently. Now, in an investor presentation that the company had released last month, they had highlighted that over the next 2 years, they intend to maintain around 25% top-line growth CAGR. They intend to also remain net debt-free, sustain margins near the 40% mark, and also maintain a strong order pipeline. So bullish commentary there from the management. Based on the shareholding pattern, around 42% of the company is still owned by the promoters. Remember, they recently did a QIP, and in that same investor presentation, they also mentioned that they have utilized these funds for new product development. Now, when after this rally that you have seen over the last few days, in fact, over the last 12 months, also the stock is more than doubled. And since then, as a result of which the stock is now trading at an FY25 price to earnings multiple of 70 times. And in comparison to its peers, like Bharat Electronics, who are trading at 37 times, Apollo Micro, which is trading at 4 times, and DCX Systems, which is trading at a current year earnings multiple of 38 times. Now, when it comes to brokerages, there are 8 analysts who have coverage on the stock. 5 of them have a buy rating, 3 have a hold call. But Incred is of the view that new order wins are key for the company's growth rate to sustain. There is a delay in order finalization. That is a cause of concern. And lower than anticipated order wins and a lower than anticipated defense outlay will be some risks for data patterns going ahead. Nonetheless, the stock is back at a record high. The missile has been fired.
And so have those valuations, right? 70 times, nothing short of a rocket indeed. Thank you so much, Hormaz, for the details. They're interesting analysis. Well, let's move on and welcome our next guest on the show. We have Gurmeet Chadha from Complete Circle joining in. Gurmeet, good afternoon. Now, I don't know if you look at this company or not, but it's staggering, right? What the words defense and aerospace, and if you put them together in one line, and if that's the business that you're in, then the market's really willing to, reward you, by the lots. Your sense, I don't know if you have looked at data patterns, do share your thoughts. If not, then, what would you look at in this space, given the run-up that we've seen already?
So you're right, Surbhi. I think, what I think a lot of us, including us, missed out is the size of the opportunity. I think sometimes we get too fixated with the earning multiple and EV by EBITDA multiple so most of the people, if you see, look at HAL, look at Bharat Electronics, look at, most of these defense names. I think people got happy with the first 40-50%. And then, the baggage you carry for, some of the names in defense, people did book in early. So I think especially for data patterns, I think valuations are continue to be stressed. Very, very strong player in defense electronics, if that's the space you're tracking. We like Bharat Electronics more. They recently got more orders on the Tejas EW systems and more reasonable valuations, better dividend yield. Right now, the reasonable is also 40 times. Such are the times right now. What we are invested already is in solar. The defense order book is already shaping up well. It's already now almost 10% of the overall revenues. My sense is it will be 25-30%. I saw some of the stuff they are doing, including Pinaka rockets, which could fetch them 4,000-5,000 crores revenue additional, as well as the other ammunitions as well. We continue to like HAL. We have Zen Technologies in the portfolio. Zen for more simulator programs. So that's a more high-end defense play. The kind of patent filing they have done. They've certainly started getting coverage from a lot of brokerage reports. Their Abu Dhabi demonstration center is coming up pretty well. And a very, very good track record even on patent filing as well. So that's more on simulator and antidote systems.
Okay, all right. Hi, Gurmeet. Good to see you in. So firing away with solar as well as Zentech for your portfolio. Also, give us a sense about these insurance companies. What do you all have in your portfolio from the insurance basket? And are you all positive from here on?
No, we were not very constructive on life insurance, especially after the budget took away some bit of tax arbitrage. But we continue to hold ICICI Lombard. I think there the patients got rewarded. My sense is the total ratio will continue to improve. Moment it starts inching towards 100, which means that you start making money on underwriting as well, and not just on investment income. I think the stock will further see movement. And very good. I think the motor insurance portfolio is stabilized. They continue to innovate on health and other stuff. And they went a little slow on agri insurance when the market got very gung-ho on that a couple of years back. So I think that's something which is looking good. But I think a broader play, which is very evident now, see, NSE added 1 crore investors in 5 months. I remember it took 35 years to add 1 crore investors. And now we are adding like 1 crore investors every 5-6 months. I think the best play is to play depositories, play RTA agents like CAMS, etc., play some of the asset management companies. I think that to me has less volatility, has less, in a way, it's kind of a duopoly, especially for depository and RTAs, and more asset-light, model. For example, I told you this, HDFC Mutual Fund started their mutual fund with 25 crore capital. Now they make 500 crore quarterly PAT. Where do you get this kind of business? It's almost like infinite ROE. And see the way prices have jumped. Look at CDS, etc. I think that to me is a even BSC. That to me is a better play in the non-financial, non-banks part of it.
Gurmeet, we'll take a quick break here, but stay with us. Just coming back in a bit. The index is up, is giving up. I mean, some of the gains, 10 points is all that it's left. And of course, overall market breadth has been a little poor since the last many hours. We take a break. We are back. Gurmeet, of course, is with us, and we'll wrap up the markets for you.
Welcome back. It's come off a bit in the last few minutes, hovering around 22,400. The new record high today was 22,440.9. So from that level, we've given up close to about 40 points. But as you can see, it's been a very quiet, range-bound day. Gurmeet is still with us. Gurmeet, any stocks in which you've booked profits or pared down your holding after the kind of run-up that we've seen?
Yeah, some spaces, as I said, in fact, some cases we encashed a little early, as I was telling Shurvi. Some of the defense name it's more rebalancing. We've not really exited much. It's more rebalancing. And we've added more defense names, as I said, including Zen Technologies. We have Bharat Electronics on the radar. We also trimmed some exposure to auto after a very sharp run up, especially in passenger vehicles, especially the OEMs, partially, again, not full exit. And we're trying to add more energy names like Power Grid. As I said, I think energy is one space which is increasingly looking extremely attractive to us.
Gurmeet, we were just discussing Zaggle here. A phenomenal run, right? It's I thought when it came, I was comparing it to Sodexo, but I guess it's a lot more than Sodexo. The last we heard is they've added a brand called Benetton. They're doing a lot of the employee management, supply chain kind of thing for them. The back end, basically, they're doing it. But go on, your thoughts.
Again, as I said, quasi play on the up, rising middle class, affluent consumption. You can play through multiple routes. You can play through the hotel route. You can play, and I think one space which I'm a little surprised and also is trying to now probably make a bottom is the QSR space. Again, not strictly comparable again, but that again is consumption. And I think it's been a weak set from Jubilant, from Westlife, from most of these names. My sense is now once the base stabilizes, some recovery, except for Zomato, of course, I think the QSR space is good. I think the entire market cap is now 55,000 crores. That's less than, let's say, Cipla or some of the other major names. So I think that's one space we are tracking. I think you have to be a little counter-cyclical. I think one space which to us is looking weak is one is FMCG. You see if there's some bargains like HUL or Dabur once rural economy picks up. And second is QSR. I think this is one space which is not really reflective the way other consumption trends are, whether it is hotel, whether it is the luxury watchmakers and other luxury consumption brands.
Absolutely. Take that point, Gurmeet. It's all about premium consumption, right? No one's looking at simple burgers or your simple, soap and sabun and so on and so forth. That's just not, been moving. But just to sort of, cap that off, what are the kind of FMCG bets you're taking? Because there's a larger debate out there whether they've gotten into a structural, low single digit to mid single digit kind of a run rate, while valuations are still pretty commanding. So what would you say to that, and what kind of FMCG bets are you picking up?
So, we continue to hold Tata Consumer. I think that's something which has really played very well for us for very long periods. I think ITC is looking extremely attractive, corrected like almost 25% from 530 kind of levels. We have the hotel demerger due. FMCG business, they've really built it well. I think now it's at 11% EBIT margin, great distribution reach. I think it doesn't get the same premium as HUL and others for its FMCG business. It's still cigarettes. But if you now start breaking it up, it's now a very, very meaningful contributor and it's sequentially growing. So that's something we like. HUL tactically, I think it's stagnated now for 2 years. Valuations are, becoming